Going to use the HP10BII financial calculator in order to walk through a couple of internal rate of return examples for capital budgeting. This is a continuation of our capital budgeting video series, and in the first video we looked at calculating payback period. This video we do internal rate of return. So we have two sets of capital budgeting projects, projects A and B. Project A has an initial cash outflow of $200,000, then $120,000, $90,000, $50,000, $40,000, $30,000. It's got a 5-year time horizon and a required return of 12%. There's also a critical acceptance level of 2.75 years, which we're not going to be using in this example, but is used when we calculate payback period. So again, we're going to be doing the internal rate of return on the HP10BII financial calculator. And the first thing we want to do after we turn our calculator on is go ahead and do the shift clear all. Make sure we clear it out. So shift clear all. Make sure your calculator is set at 1 period per year. With the HP10BII financial calculator, the periods per year for the 5 key is the same as the periods per year for your cash flow worksheet. So if you'd been doing something else, maybe your calculator was set for semi-annual for a bond or monthly for a mortgage payment, and you don't change that to 1 period per year, it's going to mess up your internal rate of return calculation. So make sure that's set at 1 period per year. Cleared out. And now we're ready to start inputting the values. We want to start with our initial investment of $200,000. It's $200,000, and make sure that it's negative. Use that plus minus key. Change it to negative. This is one of the common mistakes I see a lot of students make when they're doing internal rate of return and net present value calculations, is that they forget to set up that initial cash flow as negative. If you're trying to solve for the internal rate of return and that initial cash flow is not negative, it's going to give you no solution because it can't figure out how you're going to make money without ever giving anything up. A rate of return is based on an investment that then generates cash flows later on. So you've got to make that negative or you're going to get no solution. So if we've got that $200,000 in, press our cash flow button. Now we go to our next cash flow, $120,000. Again, we want to press that cash flow button, put that one in. Now notice that these cash flows are all independent. We don't have $120,000, $120,000, $120,000. We just have each cash flow one time. Now the default frequency, our n sub j on this calculator, is 1. So we don't have to tell it it's 1. It already assumes that unless we tell it otherwise. If we would have had $120,000, $120,000, $120,000, we'd want to tell it frequency or n sub j of 3. But since they're just 1, we don't even have to pay attention to the n sub j. So go to our next cash flow, $90,000. And CFJ. Next cash flow, $50,000. CFJ. Next cash flow, $40,000. CFJ. Last cash flow, $30,000. CFJ. All our cash flows are entered now. So now all we have to do is solve for the internal rate of return per year. Notice that that's a shift function. It's our orange shift. So we have to shift internal rate of return. And it takes a second, and then kicks out our answer, 26.72. Remember, that's percent. Internal rate of return is a rate of return. It's our expected rate of return off of our $200,000 initial investment over the 5-year time period. So let's go ahead and write that down. 26.72%. And now we want to do project B. Again, make sure the first thing you do is clear out your worksheet. Otherwise, you're just going to be adding to these cash flows that are already there. So Shift, clear all, clears that out. Now we're ready to start putting in our cash flows. Negative 400,000. So 400,000. Plus minus key, make it negative. CFJ, put that in. And again, all these are just one time period, so we can just ignore the N sub J. So our next cash flow is 40,000. CFJ. Then we've got a $60,000 cash flow. $120,000 cash flow. Oops. Now see, I went a little too far here and put in 1.2 million. I haven't pressed CFJ, but instead of clearing it all out, all I have to do is see this back arrow button. Press that, takes away my last zero. It's back to the 120,000 I want. Go ahead and press CFJ. 240,000. CFJ. And 340,000. CFJ. Now all my cash flows are entered. Again, I want to solve for that internal rate of return per year. It's a shift function. So shift internal rate of return gives me 19.74%. Now a quick interpretation. What do I do if the projects are independent? If they're independent based solely on internal rate of return, I can choose A, or I can choose B, or I can choose both, or neither one. However, remember, my internal rate of return is the expected rate of return. The K hurdle rate is my required return. Since my expected return exceeds my required return for both of these projects, and they're independent, I want to take them both. Both of them are going to have an average annualized expected return over the next 5 years that's greater than my required return, so they're both good projects. How about if they're mutually exclusive? With mutually exclusive, remember, it's not enough to choose whether or not the project is good. I have to choose the best. If I take A, I can no longer take B. If I take B, I can no longer take A. So I've got to decide which is best. According to internal rate of return, the higher the internal rate of return, the better. So project A is the best. If these are mutually exclusive, according to internal rate of return, I would want to take project A. That should help you with calculating internal rate of return using your HP10BII financial calculator.